This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus is unlikely to alter existing plans to raise output gradually when it meets on Monday, delegates from the producer group told Reuters, despite U.S. President Donald Trump urging OPEC and its de facto leader Saudi Arabia to bring down prices. The meeting of top ministers from the OPEC Plus is scheduled for 1300 GMT on Monday, days after Trump called on OPEC and Saudi Arabia to pump more oil. Four OPEC Plus sources said Monday's meeting of the Joint Ministerial Monitoring Committee was unlikely to recommend that OPEC Plus increase output more than already planned.
U.S. crude oil production fell by 122,000 barrels per day in November to 13.314 million barrels of oil per day, down from a monthly record high of 13.436 million barrels of oil per day in October, the U.S. Energy Information Administration said in its Petroleum Supply Monthly Report on Friday. Products supplied of crude oil and petroleum, EIA's way of measuring demand, fell by 775,000 barrels of oil per day to 20.235 million barrels of oil per day in November, the lowest since April 2024, the data showed. That compares with a monthly product supplied of crude oil and petroleum record high of 21.666 million barrels of oil per day in August 2005.
Moving on to the top news in the energy sector.
The gas price cap introduced by the European Union during its 2022 Russian gas crisis will expire on Friday, having not been triggered since its inception. The cap would have applied if gas prices surged to unusually high levels, responding to months of soaring energy prices caused by Russia cutting gas supplies after its invasion of Ukraine. The cap was designed to kick in if European gas prices hit €180 per megawatt-hour, a level the benchmark EU price has not reached since the depths of Europe's energy crisis in 2022, when it surpassed €300 per megawatt-hour.
U.S. President Donald Trump said on Friday he expects his administration to impose tariffs related to oil and gas around February 18 and it could reduce the planned levy on some Canadian crude. The U.S. imports some 4 million barrels per day of oil from Canada, roughly 70% of which is processed by refiners in the U.S. Midwest. A tariff on oil imports could lead to lower production of fuel at those facilities and drive up costs for consumers, analysts and companies have warned. Trump did not name a specific country to which the new tariffs would apply or provide any more details about the plans. Next, we have the top news in metal market. Gold prices surpassed the key $2,800 mark for the first time on Friday, fueled by a rush to safety following U.S. President Donald Trump's tariff threats, which heightened concerns about global economic growth and inflationary pressures. Spot gold rose 0.3% to $2,801.29 per ounce by 1:41 p.m. Eastern Time, 18:41 GMT, after hitting a record peak of $2,817.23 earlier in the session. U.S. gold futures settled 0.4% lower at $2,835, trading a premium to spot gold rates.
Aluminium and copper prices fell in London on Friday as global markets braced for the threat of U.S. tariffs on Canada and Mexico as early as Saturday, moves that could disrupt nearly $1.6 trillion in annual trade. Three-month copper on the London Metal Exchange was down 0.8% at $9,056.50 a metric ton by 17:29 GMT, while aluminium lost 1.0% to $2,599.50. U.S. President Donald Trump on Thursday reiterated his threat of 25% duties on imports from Canada and Mexico. That inflated overall uncertainty, driving more investors towards safe haven assets.
We will now look at the top news in the agricultural sector.
U.S. corn and wheat futures fell on Friday on month-end positioning, while soybeans traded nearly flat and soybean oil jumped more than 2% in volatile trade amid ongoing uncertainty around U.S. President Donald Trump's plans for tariffs. Chicago Board of Trade benchmark corn futures settled down 8.25 cents at $4.82 per bushel, and wheat ended down 7 cents at $5.59 -1/2 a bushel. The most active CBOT soybean contract fell down 2 cents to end at $10.42 a bushel, while SoyOil settled up 1.13 cents or about 2.5% to 46.11 cents per pound, after gyrating in a wide trading range.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.